Hello and welcome to this channel. Now today we're going to introduce you to a strategy on the stock market, which is actually market 1, or if you want the short term, we can call it Mark 1. Now before we actually start on this video, let's have our special thanks to Mark Melnick, Eddy, Jero, Kelly, CeeTee, and Gator, with other helpful people from T3. Now today you can see we're using the TC2000 app to look at this chart. Today we're going to use this example, which is Tesla. Now you can see here, this is actually a use for market 1, which is a profit, and this is also another one, which is not a profit. Now today we're going to tell you how you can choose which one to use. First of all, what you must have is that the highest point of a candle must be lower than the previous candle, in which here it did meet this condition, which you can see here. This highest point for this is 738.10, while this is 737.76, which means that it is lower than the previous bar. Now find the highest point, which we have just said, 737.76. When you want to make this trade, since it's a call right here, we want the bid to exceed the highest point of this candle, which is the number we have just said just now. And by doing that, we have a normal market 1. Now, why would this market 1 fail and this market 1 work? It's because we have favorable conditionings for these market 1s, which will make them have a higher risk or safer profit. Now, we only have one very important conditioning, which will turn the whole tide of the candle. Look at this candle. Now, we will introduce you to all these 5 lines on the screen that you do not understand right now. Look up here. We have this, which says AVG, standing for average, 8. And this one says 21, this one is 100. Well, now what that means is actually exponential moving average, 8, 21, and 100. Now we have the VWAP too, which is very important. As you can see on the chart, most of it actually helps to move our whole tide down. Now here we have moving average 200, which isn't an exponential moving average. You have to remember that. This is a simple moving average. Now we do have pivot points here, which we wouldn't be using for this video. Now let's talk about the conditioning. We want the candle to be above all of these lines, including VWAP plus the moving averages. Look at this candle. It is above VWAP, this moving average 200, the 8, the 100, and the 21. This means that has finally met the conditioning. While look at this. Although, yes, it has a big low than the before candle. But look at it. It's lower than the VWAP, which means that the conditioning is actually not in your favor. Which is exactly why, although there was a slight profit, it did bounce down really hard. Now, you might think, you see this, it is a profit, but what if I didn't sell here? Now, how would I know when I want to sell? You actually have a cut loss, which is actually the potential point you want to sell. Now, we all know to take profits really quick, and we would want to sell here. To see that this bar has went down after going up, we know that it's almost going to a downtide. We usually put our cut loss at the starting point of this candle, which is used Mark 1 on. Now let's look at this point. On the right, you can see our line pointing right here. You can see this moving bar. Now, we put it right on the starting point. Now, let's take an estimate. It is 735.01. Now, you see this bar. When it hits this exact number, 735.01, this is when your minimum sales must be to prevent you from losing a very big loss. As you can see here, we had a very big drop. So before it hits this line, we recommend you not to, but if you do feel there's something wrong, you can also do it. But here we actually take a profit. Now here which is actually the not profit point. Let's give you another example. So let's see. Let's scroll all the way to 10:45 a.m. Now here we have another point right here, which is also a setup for the Mark 1. As you can see, this is lower than the bar or candle before. Now this has met our first point. Now let's find the highest point, 726.19. We want to check on the bid as it's going call, which is up. Now when it exceeds this highest point, you want to buy, just like how we said just now. Now this is actually a very good one, because as you can see, although it's close, but it is above all of these lines, including the VWAP and the moving average. That means that it's favorable to your condition. Now it did went up, but you do see this bar going down. Now you ask again, why do we not sell at this bar to prevent a loss? It's because we see this bar. Just now we have said the cut loss starts at the start of this candle. Now let's check for the start of this candle. Let's take an estimate. It will be 725.57. And check this bar. The lowest point it has ever got is 726 exactly. Now it did not hit that, so we recommended you to not cut loss. Although you could, and you would still earn a slight profit. Now the profitable points is right here and right here. So if you didn't fall for the drop right here, you would be able to get this higher profit. And though you see this going down, you would know that's going on a downtrend. So we would recommend you to sell it quick and earn a profit right here. As you can see, it went down straight after. And now these are the 3 points and 3 examples that we have shown you on the Mark 1. Now be sure to subscribe to the channel and leave a like to check out our new other strategies on the stock market. Now we wish you goodbye.